newsmakers, and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Our nation's scrambling to secure trade agreements with Washington or lobby for extra time ahead of Wednesday's deadline. President Trump says he will send out letters about tariff plans starting later today.
I think we'll have most countries done by July 9th, yeah. Either a letter or a deal.
But they go into effect on August 1st. The tariffs go into effect August 1st, but the president is setting the rates and the deals right now.
Well, we're now joined by Ozan Tarman. He is Vice Chair of Global Macro at Deutsche Bank, Rosalind Matheson, our EMEA News Director, and Brendan Murray, our Trade Czar. So thank you all for joining us. Brendan, you're probably the busiest one here because it's trying to now understand why the letters are delayed. I mean, it's all a question of timing, and what other countries are doing now to either, delay the imposition of tariffs or negotiate.
Yeah, it sounds like the administration is trying to buy itself another 3 weeks. We heard Treasury Secretary Bessent on the Sunday shows yesterday say there's been some congestion here at the finish line. And so this is what happens when you're trying to negotiate a couple of dozen trade deals in 3 months. They start to pile up and they get complicated at the end. And therefore, the Trump administration is saying that deadline that was initially July 9th, we'll give it a little bit of flexibility till August 1. Now, we also heard him say that there are going to be some big deals announced as well. We could see, the main ones that we've reported on are, it looks like the European Union. There might be some sort of framework that comes together. India, we've been talking about for weeks, that happening. Vietnam, the president announced it last week, although Vietnam didn't confirm it. So some of these deals could come together between now and Wednesday. But as we heard Secretary Lutnick say, they need some more time to set the rates for the countries that don't have deals and maybe see if that'll bring them to the table.
But I mean, so the BRICS group is also getting slammed a little bit more. Again, is that a negotiating tactic, or is it basically countries that align themselves with BRICS? Yeah,
it sounds like another in a series of complaints that the president has with the BRICS countries and what the BRICS are organizing themselves to do. He's railed against their efforts to create some sort of alternative for the dollar in the global trading system. So 10% is not a big tariff based on all of the ones that we've seen from President Trump. So I think it's more of a way to annoy the BRICS as they meet for their summit.
So, Ozan, how is that all playing out in the markets? Because, again, there's quite a lot of tension, but a lot of the equities were at record highs. So they're pulling back a little bit, I guess, in a wait and see.
Incredible comeback from equities, as you said, at all-time high levels. For reasons Brendan put nicely, this timeout taken until August 1, equities are a bit in red, but calm. Because both Bessent last night in the shows, Lutnick right next to the president, is emphasizing that we may still have 3 more weeks of negotiations. Some letters will fly out, so it's very understandable that people are taking some chips off the table. It's been an incredible run. But I still think this trade tension in itself, trade tension 2, will not be enough to derail us from a nice summer of carry.
Brendan, at the first time around, there was a little bit of, I guess, bravado, and certainly there was some kind of chart with an equation that didn't make that much sense. Are things a little bit serious now?
Yeah, it would seem so. I would also offer that the 3 weeks extension might give the markets a bit of a breather, but it's also extending the uncertainty. All of these different countries that trade with the U.S., what is their tariff rate going to be? Remember, the president says these tariffs are being put on the countries, but they're actually being put on the American importers, bringing goods from those countries in. So I think, this is going to extend through earnings weeks in the weeks ahead. And so I think we're going to see uncertainty, still the cloud lingering over the global economy.
All right, Brendan, thank you so much. Brendan Murray has to go to radio. Roz, when you look at, the BRICS leaders, I mean, this is China and India. How much of a retaliation could we see from the Chinese side?
Well, it's interesting, as Brendan was saying, this seems to be more about Trump just trying to needle BRICS. I mean, he was always a bit dismissive of BRICS, and then as BRICS expanded and the membership has gotten quite big, if you look at BRICS now, it's a significant part of the global economy, of output and trade, he's become more and more critical of it. And they're obviously been meeting this weekend in Brazil, so he's sending them a message. If you come too much together as a group and you see yourself as an alternate power entity to the US or some of the Western-led institutions, then I will come and challenge you. But they're not really commenting from BRICS on this today. Most countries don't want to go anywhere near it and possibly just seeing it as a trial balloon from Donald Trump. But what it does show again is that he's watching very carefully as some of these power blocks shift around the world, and we do see powers start to gather also in what's known as the Global South.
Yeah, and Ozan, I mean, what I'm surprised about is non-farm payrolls were actually fine. I mean, it's not really all of this uncertainty is not translating into equities or really the U.S. economy for now.
Francine, team stagflation has been losing for a while. So that's one emphasis that I want to put. Inflation has been coming on the tame side. People keep saying next inflation will be hot. Maybe. But as Secretary Bessent is saying, maybe team transitory should come to play in that again. And non-farm payrolls.
How is that possible?
Because people keep delaying the wounds of that tariffs onto the next one. So maybe, yes, next one will hurt or the August number will hurt. But then after that, consumption may come lower. And September and October prints can be more tame. So I do have some sympathy with the arguments that Waller and Bowman are making beyond the politics, actually. And on the stagflation, on the growth side, like you said, last two non-farm payrolls, again, at least on the headline side, pretty healthy. That's why retail kept on buying the dips, and so far they had beaten the professionals on the equity side. On trade, two things to very quickly mention. One country, very important country, Brandon didn't mention for a reason, Japan. There, very surprisingly, the deal negotiations are not going so well, and long yen is a crowded trade, so watch out if there are no great developments. And on the ROS and BRICS, two countries that are dear to our emerging markets, not just China, but Brazil and India. Brazil also very popular trade. Long India is popular. Emerging markets had a great run. So all of a sudden, negotiation tactics or not, if we have a tough July 9, uncertainty over those three, that can give you another dip to buy.
Yeah, I mean, I know some, market analysts think there's just been too much relaxation. Japan was came out of the blue last Monday because of rice prices. Is there, when you look at the Trump administration, I mean, is there a clear pattern of what they want to do? Or again, I can't figure out how much of it is negotiating tactic or, the president being mad at this group or that group, and how much of it is actually trying to negotiate to get money in the coffers.
Well, it does seem to change on a daily basis, and it's very personality driven. So, but equally, again, the pattern is push these countries towards a deal, declare a deal, because above all, he needs to declare the wins. He needs to stack up a bunch of paperwork and say to the American people, when you elected me, I promised you I'd do this, and look at all these deals. Do the deals have to be terrific? Do they have to be detailed? No, they're all framework understandings more than full-throated trade deals. And again, very personality driven. But what is clear is that by nominating August 1, this is a chance for countries to negotiate. Even if they get a letter and they get told their rate, they can still negotiate because the US will be willing to do so. I mean, Japan is an interesting case in point because as we're talking about, each country does matter because it matters what they produce, what they sell, what the impact is on the US companies, on the US consumer, and what they're paying in terms of the economic feed through to the US. So Vietnam is important, even though it's a smaller economy for that reason. Japan is significant for that reason. The EU, I mean, it's not just really big economies that are going to matter here potentially for the US consumer, it's smaller ones too. So it's passing all of those individual deals and saying collectively, what's the impact here on the US economy?
We also have a viewer question, and then we need to talk about Tesla and Elon Musk. But, Ozan, how do economists weigh the animal spirits of Trump's deregulation agenda? Is this a heavyweight behind U.S. equities? I mean, this was meant to be the big trade,
I was going to say, we read each other's minds. It was supposed to be the big lifter. Then just 6 weeks ago, when we were in Qatar Economic Forum together, remember the long end sell-off? All of a sudden, the narrative changed. People got very worried about even a trust moment for the US. I think now that narrative is coming back. He passed it on time. It's going to give a lift to equities. But come September, there will be a big match on the long end. Those who are very pessimistic, believing that even more cuts will create a big sell-off on the long end versus those who side with, I guess, Secretary Bessent and expecting a more of a flattening. So big battle to come on September. Also, quickly, we talked about the US side of the story, but European, Deutsche Bank, there's a big story on the German side as well. So not only this 1 trillion, 1.1 trillion, but the fact that MERS is able to show that it can be front-loaded. 500 billion on defense by 29, 300 billion on infrastructure. My chief German economist Winkler estimates that it will be 20% of GDP in Germany. Those are big numbers. So that in itself gives a big boost to European story, e-stocks and euro.
Okay, we also need to talk about Elon Musk. Now, Tesla shares slumping pre-market as a feud between Donald Trump and Elon Musk intensifies. Now, the U.S. president has criticized the Tesla chief executive's plans to start a new political party. Musk announced on Saturday that he was forming the America Party a day after Donald Trump signed the tax and spending bill that he had denounced. Now, the U.S. president signaled that he's not taking the announcement seriously.
It's always been a two-party system, and I think starting a third party just adds to confusion. It really seems to have been developed for two parties. Third parties have never worked. So he can have fun with it, but I think it's ridiculous.
Well, let's bring in Craig Trudell, our global autos editor. Craig, I mean, there was lots of talk about deportation and things like that. How has Musk's, latest been received by traders, and how are investors really worried about risks to Tesla?
Well, you only have to go back just a few months, right, when Tesla last had an earnings call, and, the sort of opening remarks from Musk was, look, I understand there's been blowback about my involvement in politics and my role that I've been playing in the White House. I'm going to be stepping back from that and devoting a lot more of my time to Tesla. That is not what investors are getting. And that's why you're seeing this really, sort of pretty dramatic move lower for the shares every time, he goes right back and touches that stove. This is yet another, instance of him sort of going back on what he told investors and what he was assuring everybody, only a matter of months ago, that he got it, he understood it, and, knew that he needed to get back to work at the company, which, by the way, continues to struggle in pretty dramatic fashion and did not have the second quarter that I think even he was hoping for.
But, Craig, the risk is what? He's not focused on Tesla, or that actually he gets slammed by President Trump?
I think it's both, right? I mean, I think the fact that he is very clearly not sort of holding to his word of getting back to work. I think that it only adds to uncertainty about his sort of role at the company going forward. We should be reminded that the board has disclosed that it's looking at compensation for him. Does this sort of complicate efforts to put together a compensation package and go to shareholders and say, we should pay this guy, a whole lot of money after he's, gone back on his word to sort of devote more of his time. And also, I think there's real risks for, the administration to target the company. I think, for the moment, we've only heard a lot of conjecture in that regard, and it would be maybe surprising to see, the president go after somebody who was such a staunch ally for so long. But, he is at least verbalizing this possibility that he could go after him and his companies.
And Ross, what do you make of all of this? Is there a chance for a third party given the turmoil that we're seeing at the moment?
Well, historically, not really. I mean, third parties come and go in the US, but fail to get a lot of traction. You do get independents from time to time in the House and the Senate, but you don't get that kind of collective movement because the political structure just doesn't really support it. You need to have an awful lot of money behind you for a start. And as a political party, obviously, Elon Musk would have that, but then you've got to get the mobilisation. So whether he could is a question, and whether he will. I mean, interestingly, he just can't seem to stop himself. He does have, for right or wrong, a sense of grievance here. He feels, A, he holds grudges, but B, he'll say, I stepped away from my businesses. You asked me to come and do this. I feel I delivered. I neglected my businesses. In the meantime, I did all of this for months, and you've wiped it away with this big, beautiful bill that you've enacted. And he feels a very strong sense of grievance about that. So he keeps coming back and pressing on the bruise with it and threatening this political party, whether he does it or not. It's clear that his relationship with Donald Trump has completely changed.
I mean, does the big, beautiful bill, Ozan, actually change policies? Again, does it impact inflation? I mean, it's so big, actually, and large, that it touches a whole swathe of things.
I think it will bring the long end back. Come September, come October, we will test it. Bond vigilantes, they will try their hand again. But on terms of inflation, as I said, testing times, yes. Big trust moment, stagflation camp winning, I still don't see. After the last NFP, we shut the door on the July cut. But if anything, there is still a chance, not only that Fed cuts 25 in September, but if we get some slowdown, people push them to go for another 50, just like last year.
Okay, thank you all for joining us. Ozan Tarman, their Vice Chair of Global Macro at Deutsche Bank, Rosalind Matheson, our EMEA News Director, and Craig Trudell, our car czar. Coming up, we're in conversation with Portugal's finance minister as the clock ticks for the EU to seal a trade deal with Washington. That interview is next, and this is Bloomberg. Well, work by European Union officials continued over the weekend to try and secure a trade deal with the U.S. as the deadline nears. Tariff discussions will be high on the agenda as Euro area finance ministers meet in Brussels today. Well, ministers will also vote for a new president of the Eurogroup, which chairs the monthly meeting. Well, I'm delighted to be joined by Portugal's finance minister, Joaquim Miranda Sarmento. Minister, thank you so much for joining us. What's your latest view on trade negotiations with the U.S.? What do you think the end results will be?
Well, good morning. Thank you very much for your invitation. The deadline for those negotiations is next Wednesday. We expect on the meetings today of the Eurogroup and tomorrow of ECOFIN to have already some update of what the Commission was able to negotiate with the U.S. administration. As we have always said, tariffs are hurt economic growth. Tariffs are a problem in terms of the efficient allocation of resources. Tariffs will reduce economic growth both on U.S. and Europe, and they will mainly hurt consumers and particularly those with low income. So we do expect that at the end it's possible to have an agreement with very low tariffs, an agreement that could be perceived as beneficial for both parts and that could continue to allow us to trade and to increase value for our citizens.
Minister, do you think that the EU would be right to retaliate if the terms of the deal were not favorable?
Well, if the terms of the deal are not favorable for the EU, then there is no agreement. And in that case, obviously, the European Union will have the discretionary possibility of making decisions. I do believe that just like happened in 2016-17, when the U.S. administration, also led by President Trump at the time, raised tariffs, the European Union was very selective on the tariffs that have increased concerning the U.S. And I think that experience and the lessons that we learned from that experience should be replicated now. If an agreement is not reached, and I still believe that an agreement is possible and desirable, and I still believe that even if on Wednesday is not possible, there will be most likely a new deadline for an agreement. But if at the end of the day, an agreement becomes not possible, Europe should not retaliate on a full scale, but should be very selective in order to protect the European economy and to protect the European consumers and citizens. That's our first and foremost mission.
Minister, you have a lot of decisions to make in the next couple of weeks and months. Who will you, Portugal, actually back as a new and the next Eurogroup chief?
Well, the Portuguese government is represented by a coalition that is in the European Popular Party. So we will support the current president, Pascal Donnet from Ireland, who is also a member of the EPP. The three candidates are all very good candidates. My three colleagues are three excellent finance ministers with a lot of experience and technical skills, but we believe that the current president should continue for an additional term.
Yeah. And have you decided, has the government decided who it will name for Bank of Portugal governor? Will you reappoint the current one?
That's something that we're still evaluated, and we'll make a decision in the short term.
Minister, I also wanted to ask you about how big of a stake you want to sell in TAP.
We will sell in this first moment less than 50% of the capital, and we will advance on the selling process in the coming weeks, trying to find an international partner that could help us to develop the company, increase the routes, increase the number of planes, increasing investment in the company, and then obviously recovering some of the money that the taxpayers put on the company 4 years ago.
So do you have a calendar of when you'll announce the rules of the sales? And actually, have you spoken to potential bidders yet?
Well, in the last year, we had meetings with several potential candidates, large aircraft lines that are very interested in TAP, and we will announce the process and the start of the process in the coming weeks.
Minister, do you have a valuation in mind that you would be considering for TAP?
Well, we do have, and when we announced the process, when we announced the conditions, the timeline, the conditions to be included or excluded from the process, we'll also make public that valuation.
Okay, so Minister, I hope to get you back on Bloomberg TV then, but very quickly, what kind of foreign investment are you expecting in Portugal this year?
Well, we had several agreements. We had Lufthansa Technik, we have Kalb, which is a Chinese battery factory for electrical vehicles. We have the new electrical vehicle of Volkswagen. We have several companies investing in IT, research, and share service centers. We continue to focus on bringing to Portugal foreign direct investment, mainly on technological areas, in industry where technology is also critical. So we are continuing to work in attracting large industrial projects that can have spillover effects on a small economy like Portugal.
Minister, as always, really thank you for your time today. Joaquim Miranda Sarmento there, Portugal's finance minister. Coming up, OPEC Plus surprises markets with a bigger than expected crude production hike. We'll talk oil next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. President Trump threatens an extra 10% tariff on countries aligning themselves with the BRICS group and says tariff letters and trade deals will be announced later today. China will impose some reciprocal curbs on medical device imports for companies based in the EU, fueling further tensions between Beijing and Brussels. Plus, Tesla slumps in pre-market trading as President Trump slams Elon Musk's plan for a rival political party. So, on to one of our top stories on oil falling this morning after OPEC Plus agreed to boost production by more than 500,000 barrels per day in August. Now, the bigger than expected hike has surprised markets and raised concerns of a glut, just as U.S. tariffs spark worries about the demand outlook. Now, for more, we're joined by Bloomberg's Horizon anchor, Jumana Bercetchi. So, Jumana, welcome to London. Why is there another upward surprise from OPEC?
Yeah, well, I mean, I should say, Francine, that it took them 10 minutes to make this decision. So pretty unanimous. It was quick. They surprised the market once again with a larger than expected output hike, bringing back 548,000 barrels to the market, more than the 400,000 odd that they've been bringing back the last couple of months. And indeed, it is an upward surprise. But then you look at the reaction in Brent this morning, and it hasn't been huge. And namely because OPEC Plus seem to believe, or at least the voluntary cutters, the G8 as they're known, seem to believe that the market can absorb it. They speak about steady global economic outlook. They talk about healthy market fundamentals and low inventories. So it seems to be the case that they're taking advantage of this strong seasonal demand. Right now it's summertime, it's peak refining season. There's lots of use, electricity demand in Gulf countries, obviously air conditioning units for transport fuel in the West. At the end of the summer, some of those seasonals are going to start to subside. And that's when you could probably start to see this inventory build up once again. So looking ahead, you want to watch out for further non-OPEC supply. Of course, that has been a major driver of the market, not just out of OPEC, but out of the likes of the U.S., Guyana, Brazil, as we've been talking about. But then also whether you're actually going to see an impact on demand based on some of the uncertainties around the global economic outlook, and whether that's also going to start to build up inventory. So the likes of Goldman Sachs, JP Morgan do actually see Brent returning back to around $60 by the end of this year, namely because they see supply growth massively outpacing demand growth in the coming months by a multiple of 3 to 4 in some cases.
Jumana, thank you so much. Jumana Bersecci there with a terrific update on what we heard in the last couple of days. Now we're joined by Nadia Martin-Wiggen, Director of Svelland Capital. Nadia, thank you for joining us. I mean, the concern is, I guess, is there going to be an oversupply or not? For the moment, OPEC has been proven right time and time again.
And as we see with Saudi Arabia, they've raised the prices by $1 a barrel for the next month as they increase supply themselves, probably forecast by at least 200,000 barrels per day. What we view at Svelland Capital that they've been doing is they've been putting in a bit more at a time and seeing how the market handles it. We didn't physically see the oil until June when we had the 12-day war develop, and that's when we saw an extra 100,000 barrels per day from Iran. We saw an extra 450,000 barrels per day from Saudi Arabia. And yet the market absorbed it. We're in steep backwardation and refinery margins are great. So far, the strategy has been working.
I mean, what kind of impact does that have? And we have a great viewer question, actually, on this. What kind of, does this mean that there's a reaction from frackers? So this viewer is writing in saying, is this putting OPEC on alert for U.S. frackers to increase output at a cheaper cost?
Well, it is putting pressure on them, but it's not the kind of strategy that we saw during COVID where they needed to break shale. Yeah. And the 12-day war changed things for the frackers because they could hedge not only next year's volumes, but also the fourth quarter this year. So where they were starting to feel this pressure at $55 to $65 a barrel, helped by high natural gas prices, but those have come off at Henry Hub in the U.S. Now they're more hedged. It doesn't affect Exxon that has huge efficiency gains, but some of the smaller independent producers, now they are more hedged. So it's not going to take 2 or 3 weeks for Saudi Arabia and OPEC to break shale. It's going to be more gradual. And when we look at our forecast for U.S. supply growth, last year we were thinking 400,000 barrels per day year on year was possible. Then we saw this pressure. We saw flattening out. But now we might actually see 100, 150,000 barrels per day year on year growth by year end, even though it's been flat year to date.
Yeah, but now, I mean, this is a massive bet also on a global economy that stays strong and a U.S. economy that stays strong despite everything that we're seeing with trade.
Absolutely. And I mean, this decision came ahead of the trade announcements. We know the big, beautiful bill is passed. So that, in our view, is inflationary and supportive. But at the same time, a weaker U.S. dollar is great for emerging markets if that is what ends up being the result of this. So we can see that demand. I mean, right now, the largest growing economy in terms of oil demand is India. And so a weaker dollar is helpful for them. China's own demand isn't growing, but they're still importing crude. They're stock building, but it's strategic. So it's not a problem for the overall balance because globally, when we look at the OECD inventories, we're at a very low level. And so even if we're building at least 1.5 million barrels per day, which is our forecast from September onwards, a poor trade outcome, we're looking at 3 million barrels per day. But it's not an acute disaster until really, say, Q1 next year. The issue is that the market, once it clears out this tightness, right now we have a physical tightness in the market, then it starts looking ahead. And that can be a quarter ahead, and that's when we can see that downward pressure that Goldman Sachs and Morgan Stanley are talking about.
But Nadia, it also means that actually they're taking a bet that, I guess Iran quietens down from what we saw in the last couple of weeks.
Well, Iran actually boosted production. They boosted exports by 100,000 barrels per day. Trump said, oh, China, you can buy Iranian crude. But when you look at the tanker companies, the Western tanker companies are not willing to touch Iranian crude right now. Iranian crude is still using this dark shadow fleet like the Russians. And this is a big question in OPEC Plus because the Russians are supposed to increase production 100 to 160,000 barrels per day if you look at the last 2 months, and they haven't really been doing that. Will they be able to do this in a decrepit, dangerous, dark fleet that can have accidents? And at a time when it especially delivers to these independent refiners in China that Beijing wants to marginalize.
But did you see, the Trump comments were taken with a lot of skepticism by others because, we knew that it was happening. But is this a change in U.S. policy, or did he just misspeak?
Well, maybe he's front-running policy. As of right now, there are no changes in terms of the rules. And the sanctioned ships continue to be sanctions. The Treasury has not changed anything. But maybe there is an openness. But as we know, Trump likes to play both sides, right? He'll play hardball, and then we have Netanyahu coming today. Let's see what he thinks after that. But he's showing a willingness to play on both sides. And of course, Iran turned out to be much weaker than we thought. And so they desperately need the money in selling crude. Russia desperately needs the money in selling crude. But on the other hand, it's an opportunity to squeeze both of those countries. And of course, when we think about BRICS.
Yeah, and given everything that's happening with tariffs, how difficult is it to predict the price of oil? Is it going to be range bound or volatile?
Well, right now it is range bound. If we're above $65 a barrel Brent, we don't have an algorithmic trading signal to sell. And that was the big difference when we entered this 12-day war, is that the market was net short. Then it started to turn long. Not everyone was max long. And now we're in a balanced market. So that's where the range is comfortable right now.
What kind of level does Donald Trump want? And is this also a helping hand towards U.S. policy?
Well, he always wants it a bit lower. Right now, we see 1% year-on-year growth in demand for gasoline because the price is about 7% cheaper at the pump. 10%, 50 would be even better. But the problem is, if he goes down $10, that oil industry in the U.S. will suffer more. And he wants drill, baby, drill. And also on the gas side, because there's a lot of associated gas. LPG is a huge part. That's half of the shale growth, if not more. And when we look at these trade barriers, China's granted a reprieve on ethane, but not yet on propane, that to keep that tariff-free like they did in Trump 1.0. And that's a very important part of that growth chain, because we need that to make plastics to send Barbies to America.
There you go. Extremely crucial and important. Nadia, services companies, you believe, are prioritizing offshore growth. So again, how does that change dynamics in the U.S.?
So what we saw when the shale boom happened and then the collapse in 2014, 2015, 2016 is that the service operators, when we had that uptick, they didn't have the capacity to boom. What we see now with oil field service operators, they're prioritizing offshore. They're prioritizing gas. They're not prioritizing shale. So what that means is their equipment can get run down already at these kinds of prices. So if there is an upturn, then they can't boost that much, which means that this OPEC Saudi policy of slowly adding more oil into the market, putting pressure on shale, means that we might not see these 500,000 barrels per day, 1 million barrels per day year growth year on year in the U.S. ever again. It might be 150,000 barrels per day. And that's how they slowly gain market share without breaking the oil price and actually forcing bankruptcies in companies.
So interesting. Thank you so much for the terrific update. Nadia Martin-Wiggen there, director of Svelland Capital. Now, coming up, Donald Trump says a ceasefire in Gaza is close. We'll look ahead to his talks with the Israeli Prime Minister in Washington later today. That's next. And this is Bloomberg. Welcome back, everyone. Now, stocks are falling as the deadline, of course, of the tariffs from Donald Trump is approaching. Overall, stocks retreating at the start of the week. U.S. trading partners rushing to finalize trade deals with the Trump administration ahead of a July 9th tariff deadline. Now, the couple of things that we're watching out for, trade tensions are back in view. Again, Donald Trump pledging to start issuing unilateral rates to dozens of countries in the coming days, causing uncertainty in the markets. Now, when the Labour Party came to power in the UK a year ago, business leaders decided to give Keir Starmer and Rachel Reeves a chance to forge a new and stronger relationship. But the past 12 months have seen tax hikes on employers, market jitters, and recent talk that Britain's biggest listed company, AstraZeneca, might defect from the London Stock Exchange. So, how is Labour's relationship with business now? Well, let's bring in our trade reporter, Jennifer Creary. Jennifer, thank you so much for joining us. So, how much have things actually soured in the past 12 months?
Yeah, so when the Labour government came to power, there was this real sense of optimism among business leaders after, 14 years of Conservative rule and, of course, the chaos of Brexit. 12 months on, a lot of that optimism has faded. And one of the key turning points really was the budget last year, where the Chancellor hiked up, employment taxes and hiked up the minimum wage, and that's really heaped costs onto business. Now you see companies, announcing job cuts. There's this knock-on inflationary effect with, food prices rising, and of course, there's that report that you mentioned of the head of AstraZeneca looking to move its primary listing to the US, citing, what they say is, red tape over the UK's regulatory regime on medicines. So it really was that budget that blindsided a lot of business leaders who thought that they had a good relationship with the government, and one that the party was so kind of desperate to cultivate ahead of the election.
So, Jennifer, what are the biggest concerns that business leaders have now?
Well, there are a couple. So, of course, there's the labour market. So there's the cost of employment with that higher minimum wage and payroll tax, and that's going to have a knock-on effect on the country's employment rate. There's, of course, that regulatory red tape that we mentioned, and that's had an impact on investment and delays to investment. There's the departure of non-doms, so these kind of wealthy foreign residents leaving the UK after the removal of that tax break regime. And, of course, there's Labour's clampdown on visas, which was seen to kind of appeal to more kind of right-wing voters, but of course it's making it harder for a lot of businesses to hire talent. So one of the sectors that's been particularly impacted by this is the care sector. So one of the main concerns that's kind of top of mind for a lot of business leaders is, whether Labour will raise taxes again in the upcoming budget. But, above all, businesses want to feel like they're being listened to rather than kind of cast aside and ignored. And the upcoming budget will be a real test of that.
Jennifer, thank you so much for the terrific briefing. Jennifer Creary, there, our UK retail reporter. Now, the U.S. president has threatened an additional 10% tariffs on countries aligning themselves with what he described as the anti-American policies of BRICS. Donald Trump has previously threatened 100% tariffs on the BRICS nations if they stopped using the dollar for bilateral trade. While Brazil currently hosting a two-day BRICS summit with the Russian President Vladimir Putin attending remotely and the Chinese president sending his premier Li Qiang. So let's get more from Alan Wong, Bloomberg's China economy and government editor. So, Alan, Trump's post did not say which BRICS policies is anti-American. What might have triggered his anger last night?
Yeah, exactly. What a lovely Sunday night surprise from Trump. We don't know really which of the BRICS policy, if there is such a thing as a BRICS policy to begin with, that Trump was referring to that might have triggered him. What we know that the leaders of BRICS countries, they did issue a statement at the end of the summit, and the statement is 31 pages long with many, many paragraphs. And I think we could just make some educated guesses here. The statement mentions their opposition to unilateral tariffs. It also mentioned more political element positions that those countries endorse, such as condemnation of Israel's strikes of Iran, and as well as the U.S. strikes on Iran, which obviously is a BRICS country. And there's also mentions of the support for calls for Israel to withdraw its troops from Gaza. So all those things, any of those things could have triggered Trump. And now Trump is not just saying that BRICS countries that support those policies might face 10% of additional tariffs. It's saying that any country that align themselves with those policies could get those tariffs. So it's really anyone's guess of what exactly he means, and hopefully he will elaborate on it, and so that we know who is in for more tariffs.
Alan, the trade dispute between the EU and China is definitely heating up. What's the latest spat about, and what does it mean for their upcoming summit?
Yeah, more news over the weekend with China's retaliating an earlier EU measure that sought to cut off Chinese companies from getting bidding on public contracts in the bloc. And China's measure was a countermeasure to that, and it's also preventing EU companies from bidding on public procurement projects in China. So it's a minor sideshow to what is going to be a bigger meeting between EU and Chinese leaders later this month in mid-July, when this might touch on issues such as tariffs on Chinese EVs and also China's support for Russia after its invasion of Ukraine, which are matters that the EU cares a lot about. We're getting some mixed signals about just how ties are developing with with EU and China exchanging these trade measures, but at the same time, China says it wants to close the ties with the EU and is ready to work with the EU if it chooses to. So ahead of the summit, we're seeing some early reports of the EU and China not being able to agree on some joint statements on matters such as climate action. So that's just one more sign that things are really in the flux right now.
Thank you so much, Alan Wong, there, Bloomberg's China economy and government editor. Now, President Trump says the U.S. will discuss a TikTok agreement with China on Monday and Tuesday, and that Washington and Beijing, quote, pretty much have the deal. Tech publication The Information has also reported that TikTok is building a new version of its app for U.S. users ahead of a planned sale to a group of investors. Now, the company reportedly plans to launch the app in the U.S. stores in September. And rescuers in Texas are still searching for at least 10 children and a camp counselor who are missing after catastrophic flash flooding. At least 70 people have died, including many children attending youth camps over the holiday weekend. Officials are struggling to explain whether they did enough to warn people of the fast-rising waters. It's feared that the casualty count will climb with more heavy rain forecast in the coming days. In Iran, the supreme leader Ayatollah Ali al-Khamenei has appeared publicly for the first time since the 12-day war with Israel began last month. This according to Iranian state media. After weeks sheltering in a bunker, the New York Times reports that Khamenei attended an annual Shia religious ceremony held at his compound. Khamenei did not address the crowd, which appeared surprised by his appearance. Now, the end of the 90-day pause in higher U.S. tariffs is fast approaching. Let's get a sense of how markets are trading ahead of Wednesday's deadline. Our Bloomberg MLive strategist, Ven Ram, joins us from Dubai. So, Ven, good morning. Happy Monday. What is the path ahead for for the euro currency?
Morning, Francine. I think that the European currencies are on the whole going to be well bid in the second half, although I'm skeptical that their gains would be anything like what we saw in the first half. As you recall, the euro, the Swissy and the Nordic currencies all averaged gains of some 15% in the first half, which I think is unlikely. Those gains are likely to be tempered. Why do I say that? Because, in the interview you had with ECB's Guindo's in Sintra last week, he said that, the ECB would be uncomfortable, kind of signaled the message that the ECB would be uncomfortable if those gains got beyond 120. So I think that increasingly the central banks in Europe will look at the nominal effective exchange rates and the real effective exchange rates and go, look, these gains are getting outmeasured or getting out of hand and are disproportionate to the strength in the economy. And therefore, even at a time when the trade deals are not yet stuck with the US, they wouldn't want undue strength in the currencies, because that means that there's going to be an additional tightening of financial conditions which will weigh on the exports. And therefore, I think the gains are going to be more tempered in the second half.
But, Ven, can U.S. stocks just keep on heading higher, really, regardless of all the risks to the U.S. economy?
Well, I think that, stocks are going to be maybe will have a Minsky moment, I think, going into the second half, because, they are overbought. They have got all the good news priced in. There's no bad news priced in, whether it's deficits or tariff. U.S. stocks have just shrugged it off. And if you look at the equity risk premium, Francine, I think at the moment it's kind of negative because you've got a PE of about, you've got an earnings yield of about 4.25 on the S&P 500, and you've got the 10-year treasury yield at 4.35. So the equity risk premium is kind of negative. And that doesn't behave very well historically when that has happened. We have seen that there's been a major correction in equities. So I think that, there's going to be a Minsky moment. When that will happen is hard to tell, but I think there is going to be one sooner rather than later.
Van, very quickly, is the moment of stress for UK labour market over now that the sell-off in gilts seems to have somewhat abated?
Well, I think that, these risk-off episodes tend to occur in episodes. And we saw one episode in January, and now it happened last week. So I think that, come the next budget, which is in autumn, I think that investors are going to sit up and take notice because, there's no way, there's not much room for Chancellor Reeves to wriggle out of the situation because the fiscal headroom that she created is kind of imperiled by what has happened and an increase in longer dated yields, and we are seeing that in Japan, we are seeing that in the US. If those yields are going to stay higher for longer elsewhere, I think gilt yields will stay higher as well, and that doesn't behave very well for the Chancellor.
Van, thank you so much. Van Ram there from our MLive team. Now, returning to geopolitics, and Israel has sent a team of negotiators to Qatar for talks with Hamas on a ceasefire in Gaza. Now, this coincides with a trip to Washington by the Israeli Prime Minister Benjamin Netanyahu to meet the U.S. president. So let's get more from our Dan Williams in Tel Aviv. Dan, what are we expecting from Netanyahu's meeting with Donald Trump?
Well, we're expecting actually for it to be surprisingly muted. It would appear that the two leaders are set to have dinner, but not an Oval Office meeting, at least not in the presence of journalists who might pelt them with questions about what really appears to be a serious juncture in this war, but not one with a predictable conclusion. There are negotiators in Qatar, that's one of the mediator countries. However, even when one discusses a proposed truce that Trump would like to see evolved into an end to the war, an open-ended end to this fighting, the sides are apparently in disagreement over the basic elements of that truce. So it's hard to know whether they'll make enough progress and whether the leaders meeting in Washington might at this point feel it's not ready for prime time.
Meanwhile, Israel's conflict with the Houthis in Yemen has flared up. Bring us up to speed with that, Dan.
Well, the Houthis of Yemen are the last Iranian-affiliated militant group that took part in this now 21-month-old war and are still openly fighting. They have kept up a sustained barrage of long-range missile attacks on Israel. There's some indication they may have also resumed attacks on shipping in the Red Sea. Overnight, Israelis were woken up by what appeared to be an incoming missile from Yemen. That was shot down outside Israeli borders. Now we're hearing that the Houthis are saying they fired 11 missiles at various sites in Israel. That does not appear to be true. It does not appear to be borne out either by the extent of the sirens or any kind of after-battle damage assessment within Israel. So at least performatively, the Houthis are saying they're still in the fight, even if Iran, their much more powerful ally, has now found itself in a ceasefire with Israel after their 12-day war of last month.
Dan, thank you so much. As always, Dan Williams there in Tel Aviv with the very latest from the region. Up next, the Bloomberg Brief. Of course, I'll have a full roundup of equities, of tariffs and trade. This is Bloomberg.